Hello traders, it's Tirunaupan here, founder of Master Markets Elite Trades Conference and the Traders Open Day. So here we are, today is going to be the end of July already. It's the 26th of July 2019. I hope all of you are enjoying all the sunny weather in London and the UK and the heat wave too. It's really been getting very hot recently, isn't it? Now, in the markets today, I think for the market update, we'll follow the same principle once again, which is I'll cover a topic. And today's topic, it's all about price action. We do a lot of studies on price action. In fact, we're the only ones, actually, I would say, in the industry as of now, who publish and trade purely on price. Now, today, I just wanted to cover a certain useful price action statistics that you can cross transfer in any strategy that you're doing. Either you're following master market strategies, or either you've designed your own ones, or either you want to plan to do something yourself. What I'm going to teach you today will be very, very useful for that. So, the thing is, before I tell you that, so let's go through the basics. You see, this is a vertical price action bar, isn't it? As you can see, it's got a high and a low, and that's what most people are using, right? Now, this is a vertical bar without the open and close. Now, let me just introduce the open for now. Let's not put the close in. Now, once I introduce the open, you can start to see that the bar is now segregated into two parts at the moment, right? One, which is the bigger um, length, and this is the smaller um, length, right? Now, if I were to put some names to that, I would just say this is the bigger range from the open, right? And this would be the smaller range to the open, or I can say the nearest extreme to the open. This is the nearest extreme, isn't it? Not this one there. And this one here, the nearest extreme to the open, is what was very commonly marketed out and technically used term as of today, thanks to Toby Crable, is what we call the stretch. Okay, and that's what we call by definition the nearest extreme to the open. Okay, nearest extreme to the open. Okay, good. Now, that's what today I'm going to be talking about, this stretch. Now I'll explain to you what the stretch is. So for example, if you got a bar like that, a seller bar, then you can be asking yourself, if I want to ask you, where is the stretch? Let's take out the close, we don't need the close. Let's say we were to say, where is the stretch? Where would you say it is? Is it to the upper side or is it to the bottom side? Okay, so most of you have got that right. If you follow this definition, nearest extreme to the open, that would be to the upside. Okay, so that would be your stretch. All right. So if you were to take a look over here in real life examples, you can see for this bar here, the stretch was to the upside. Here, there's almost virtually no stretch at all. And then you can see still stretch to the upside, stretch to the upside, and then stretch to the bottom. Okay, over there. Right, so that's what we have at the moment. So that's what we call the stretch. So I defined to you what is the stretch. Now, it'd be very useful for you to get some statistics out of this stretch. Now, let me share with you one statistics that we found. You see, over a 10-year study that we did, and over 2031 trades, using programming, of course, we found that 81% of trades, especially in the cable currency, would do a stretch of less than or equal to 50 pips. Okay, this is in a currency world, but of course, the indicator that we have used, you can cross apply to anything, commodities, indices, S&P, Dow, anything you want, right? We can do that. So 81% of this particular currency does less than or equal to 50 pips. Okay, so that's what we got over there in terms of this stretch. Now you can then ask, okay, Tiru, this is all good and fascinating, but how do we then apply it to the strategies? Some of you may have already figured it out by now, but let me explain. Right, so let's say now, for example, Let me just erase that, and let's go to dollar yen, right? Let's say for example, let me just blank, maybe let me just blank this one out and this one out, okay? Now imagine now that we are in this trade, and actually in fact in cash in we are in this trade. We took a long in, entered on the close when the confirmation bar came in, and our stop was a bit more further away. It was just around here. So after you get this bar here, low test bar, inside the bar, whatever you call it, then the next thing you ask yourself, okay, where will I put my stop loss for the next day, right? I want to get a tighter stop. Now, that's when the stretch studies can come into useful, right? Because you see, the last thing is what you want, traders, is that you do not want the stretch of the next day, your stop, to be so tight that the stretch of the next day bar takes you out and then goes in your favor, right? This is the last thing that you want. So that's why those price action studies on the stretch is so useful for you to positioning your stop. Because the last thing you want is in an upward direction, which is over here long that we've taken, that for the stretch to take you out. So in terms of this, so what we then do, we measure, let's say for dollar Swiss might be different statistics altogether, but we can say even zero point 0.5 ADR, right? 20 pips. 20 pips out of there, I want to place my stop around there, okay, about 20 pips around there. And then you can then start to see that the next bar, you see, look, the stretch didn't take you out, did it? Right? And the same thing for today as well, traders. So if you take a look at this, and if you want to do intraday on this, you can start to see as well, okay, the low and then to the top, right? If you think that today is going to be an up day and the BRO, the bigger range from the open, is going to form to the upside, then you can then say conclusively, okay, the stretch is going to be here for today, and I'm going to take this to the upside as of now, okay? So that's what you can do, right? Now, even if you take a look, 46 pips, even if I did 50, I mean 25 pips all the way be here, right? So we're still good for the stretch. Range still hasn't been formed for today. So if you're intraday traders, this is a good one to play, right? And the stretch to the to actually to the bottom. So that's how you can use the stretch studies. All right. So this is just a recap very quickly what I've just gone through. So I've just gone through with you what is the stretch, right? And the statistics that you must get as well. If you need any help with that, of course, you can always contact us. And then after that, then application of the stretch studies, okay, is what we are then looking for. All right. Okay, great. So that's to do with that. So if you go across all the other currency pairs, you can see that too. You can see that the stretch is more or less formed to the upside over here on cable. It's stretching towards the bottom, so highly probably the stretch is set. Dollar Swiss, again, you can see as well, stretch to the bottom. The range will be formed more and more higher to the top. Over here, where is it a higher possibility that this can become the stretch for today? Very low probability. Always go for higher probabilities. So this is 45. So let me just see. This is 13 pips. 13 out of 46 is about one third. One third of the ATR is still possible. One third to two third ratios for this to become the stretch. So not very good. Bitcoin, again, same principles you see. The stretch is to the upside. Almost no stretch today at all. FTSE, you can clearly see stretch to the bottom. Highly probably range is set. Very low probability for it to come all the way down now. Stretch is set again. Remember, the stretch can be used very highly popular for capturing the range of the bar. Stretch to the bottom, you can see on gold. Stretch to the upside, pretty much clear Aussie dollar. Very highly, lowly probable. Now that the range has been formed as well. Take a look at the range here. 35 pips, high to low. Yeah, it's still about 4 more pips will form its range to the ATR. zero point 0.8 ATR is already done its range due to limitations of range studies as well. The next one what we got is this one here, right? Stretch highly probably to the upside as well. Not very clear probability. Here, Dow. Now the Dow can stretch to be to the upside. 185 points we got as of yesterday. Even if you take 1/3 of that, 60 points, yeah, it's done a little bit above that. It still could. I mean, 64 point stretch. Then you got 120 to the bottom. It still is possible, 2 to 1, right? So yeah, and that's why another useful stats you can get is the BRO to ST ratio study as well, which we have done as well. Okay, okay, good. So that's on the topic as of today. In terms of our positions, the the elite room and the live trading room has been pretty much flat as of now. You can't. There wasn't any trades taken for this week, 22nd to 26th. Been quiet. We're waiting for good opportunities to come by. Live trading room is the same, so we're pretty much flat actually, 0% this week. Okay, right. So that's to do with that in terms of our performance for this week. We'll continue to monitor. However, we got a small position on the Dow. Just looking at some weakness and accumulation over here, so we'll see how that actually plans out to be. Okay, all right, I guess that's pretty much that from me in terms of this video. And if you all got any questions, of course, always feel free to pop in your questions and ask us any questions that you may have. And as we say, till next time, stay disciplined, follow your trading plan, and keep trading like a master.